Good morning from our global headquarters in New York. I'm Danny Berger. Manish Cranny is off for the week. Welcome to Bloomberg Brief. Let's set your agenda. More to come. China's latest finance briefing leaves economists wanting more, but Goldman upgrades its outlook. No respite. Boeing to slash 17,000 jobs as a plane maker lurches from one crisis to the next. And the U.S. is sending Israel an advanced missile defense system and associated troops to deter Iran. Well, it is a partial holiday in the U.S. Bond markets are closed. Bottom of your screen, bond futures a little bit weaker. It is Columbus or Indigenous Peoples Day. S&P 500 futures move higher this morning after a 45th record high on Friday. CSI 300 up nearly 2%, a volatile session. We had China's highly anticipated Ministry of Finance conference on Saturday. We're going to get into the details of that in a little bit. Oil moving lower, perhaps because investors wanted more details out of China or maybe some geopolitical risk being taken off. Brent crude at $77 a barrel, down 1.6%. So as you can see there, Chinese stocks ending 1.9% higher. The government signaled that more aid will be coming for the property sector and local governments. Let's cross over to Bloomberg's Jill Desis on this. Jill, there seems to be a mixed reaction to this of those who say that they wanted more details and those who say it's promising. What did we hear exactly?
Yeah, well, Danny, at this point, we're pretty much waiting for any kind of breadcrumbs from the Chinese government to try to get us some idea of how else they're going to try to sustain some of the stimulus. I think broadly here, what we saw out of the finance ministry on Saturday was a lot of disappointment in the lack of a really big headline number. Going into the weekend, a lot of analysts, investors kind of watching out for what we were expecting out of the finance ministry. We're thinking, are we going to get something to the tune of 2 trillion yuan, somewhere around 300 billion US dollars worth of stimulus, whether that be, maybe cash handouts, other checks, things like that to sort of help move the needle here. We didn't really get that. What we did get, though, was a promise from the finance minister to sort of ramp up some other forms of stimulus. There was a hint there that maybe they might make a mid-year budget revision, try to issue more sovereign debt in order to get things going again. But yeah, I think that's why you're seeing some of that volatility in trading today, where you've got a lot of investors sitting there trying to digest this and say, well, it does sound like help is coming, but because we don't have that headline figure out of that press conference, it's kind of hard to figure out exactly what that ultimately means.
How then did someone like Goldman, Jill, upgrade their target 2024 growth just under 5%? That's an upgrade from 4.7%. Deutsche Bank, a similar upgrade too. What pins those if we don't have those details you're talking about?
Well, I think that when you're looking at some of these forecast upgrades, including that one from Goldman, they're looking at the totality of things that have been announced so far. So remember, what ultimately kicked off the Chinese stock rally a few weeks ago, right before China went on this big week-long holiday, was this big promise of monetary policy stimulus from the government. So you had the governor of the People's Bank of China come out with this really, really unprecedented statement saying that they were going to launch all of this additional stimulus, including rate cuts. That really, sent stocks on a high. That's caused a lot of economists to look at their forecast for the year and say, well, now what it looks like China is doing is they're trying to introduce enough stimulus to at least get them up to around that 5% growth target for the year. I think what you're seeing there from Goldman, context is everything here, but upgrading to 4.9%, notice that kind of puts them just in line with that growth goal for the year. Does it really put them over? No. What does it mean for stimulus in the future going into 2025? We'll have to ultimately see, but at least tells us that a lot of economists are coming in line here with this idea that so far, from what China has announced, it's enough to, again, reach that growth goal for the year.
Jill, just at that point, because we are ending towards the end of the year, the world is still left waiting. Are there more calendar events? Are there more things to come that we could get further announcements? Or was this weekend kind of the big thing and, I don't know, anything else will be unscheduled?
There's definitely some more room for additional announcements, Danny. I'd say that a lot of investors are probably looking out for a meeting of the Standing Committee of the National People's Congress at the end of the month. Maybe we'll get an announcement on when that date is ultimately going to be set. But they do have an opportunity, these top leaders, to talk the end of the month about whether they need to introduce additional fiscal stimulus. Plus, there's some additional meetings of top leaders toward the end of November, December. You've got the Politburo meeting. You've got this big economic work conference before the end of the year. So yes, I would say that one thing that's probably keeping investors hanging on for more is whether any of these future updates that we're getting before the end of 2024 actually provide additional stimulus. Although it doesn't seem like that big bazooka type stimulus that investors have really been climbing for is in the cards right now.
Jill, appreciate it as always. We'll catch up with you later in the show too. Bloomberg's Jill Desis there. Let's get over now to Sonja Marten, head of FX and monetary policy at DZ Bank. Sonja, thank you so much for joining this morning. It's great to see you. There has been a mixed reaction to what we heard from China over the weekend. Jill was just talking about the Goldman upgrade. What did you make of it? Does it change anything for you this weekend?
I mean, obviously the market has been somewhat disappointed. I think the lack, as it was just mentioned, of a headline figure was what creates some uncertainty. But it is likely that we'll get more detail. The National Congress will be sitting later this month, and there's an expectation that maybe at that point we will get some more concrete data and numbers. The bigger problem with this package is obviously that it's probably targeting more the banks and other sectors and not so much consumption. So I think that's one of the reasons why people aren't becoming overly optimistic. The growth forecasts for this year are to edge higher, but it's a big game changer for the market. And I think that sort of explains the lackluster market reaction this morning.
So what do you do with currencies directly exposed to this, Sonja? Not just the renminbi, but things like Aussie, Kiwi. Is it a story to sell on?
Well, I think these currencies are looking more toward their central bank's direction. In New Zealand, we've had a very kind of volatile history in the last few months of monetary policy. Sort of, they're kind of all over the place with their forward guidance, and I think that's where the focus is. I think for that to change, you'd need to have a much bigger growth story out of China, and we're not likely to get that. So I think it's back to national context rather than China.
Sonja, Bank of America has a credit investor survey out this morning, and it says that concerns over geopolitics are now the highest in a decade. We see that in fits and starts be reflected in oil prices. But Sonja, people are concerned, but should it be reflected elsewhere in this market?
Well, that's a really interesting question, because, what we have obviously seen is that while, there's crises everywhere and, reading the newspapers is a bit of a chore these days, fact of the matter is that financial markets are, on the surface at least, still very, very relaxed. And that's not because they're completely ignoring the risk. It's because their calculation is that it's a risk that is not going to have a direct impact on the market. And this all comes, of course, via the oil price. That could, of course, change within seconds if the wrong thing happens. But fact of the matter is that right now, it's sort of a lingering risk, but not necessarily being priced in, because for that to happen, it would have to escalate further, which we all hope won't happen. And financial markets don't really have a high moral standard. As long as it doesn't have a direct impact, they're quite happy to ignore it, although it does, of course, create some, underlying uncertainty. But we're not really seeing it as a price.
Yeah, no, it's fair enough, Sonja. We see this time and time again, the market's inability to price in geopolitics. We were with Peter Scheer on Friday of Academy Securities, who said the risk here is inflation. You add in geopolitical crisis, potential impact to oil, plus a U.S. election with huge fiscal deficits likely to build up. Sonja, does all of this lead back to a stronger dollar and higher inflation, and maybe even rates that need to take a pause?
Well, I mean, let's imagine a scenario where one reason oil prices inflation, and look at the U.S. in particular. Should Donald Trump win the election, should he get a big majority? Obviously, expect higher tariffs to a massive.
Hey, Sonja, I'm just gonna jump in there. Unfortunately, we're having a little bit of an issue with your sound, so we're actually gonna have to leave it there. We really appreciate your thoughts this morning, Sonja. We'll have to get you back soon. We'll work on that connection. Sonja Marten of DZ Bank. Just a quick check on currencies this morning. Dollar is stronger, about 0.1%, a little bit of a weaker euro. We do have an ECB meeting to come this week. Fiscal issues are in concentration. France now on watch from Fitch of a downgrade because of the growing deficits and their plans to tackle it there. Okay, let's get to some top trending stories on the terminal this morning. Boeing shares, those are slipping in the pre-market, down 1.5%. A strike now is entering into its second month. That's been eating into cash reserves. Now the plane maker will be cutting 10% of its workforce. That is around 17,000 jobs. There are no details yet, though, as to exactly where those cuts could happen. In a Friday memo attained by Bloomberg, CEO Kelly Ortberg hinted that more dramatic action might be needed to get the company back on course. Now, over the weekend, Amazing pictures here. SpaceX managed to catch a portion of its rocket using what are essentially giant mechanical chopsticks. Those pictures, again, so cool. A critical milestone for the company in a quest to create a rocket that's capable of flying to the moon and then to Mars. SpaceX also won key approvals for 2 rocket systems in recent days. Now, it is the Paris Auto Show today, but instead of new designs or technology, the thing that drivers are looking out for this year is price. Stellantis, Renault, VW all plan to showcase their latest budget EVs at the event. European automakers, they are all under pressure to revive slowing sales, especially those in China. Here's what Renault's CEO told Bloomberg at the show just moments ago.
We have a strategy since 4 years on 2 legs. One is we have very strong hybrid technology. It's working pretty well. We're number 2 and number 3 in Europe on the hybrid segment, on all segments. But on the other side, we made the decision to develop 2 platforms, one for small cars and one for medium cars, full electric, because we think that we need, these are 2 different sports. And, an EV and an hybrid car are 2 different animals. And here you see the result. The good thing about that is that you can get out cars like Renault 5, Renault 4, or the Twingo, a legendary product, with the best, probably the best EV platform for small cars in the world.
Right, and then in terms of this sort of magic number for the pricing on EVs, what do you think that is in order to have it really take off here in Europe?
Look, I think we speak too much about list price of the car. What you should include in the equation is also, the cost of using this thing. So normally charging is 50%, 30% of fueling, okay, and the maintenance cost that is actually half on a car. So normally we should talk about that. But if you look at the Renault 5, it's 25,000 euro as a starting price. It's actually 10,000 euro less than any of the competitors. Why? Because we actually focus on the whole ecosystem, the platform on this. With the Twingo that you see, close to us, we will be able in 2026 to go below 20,000 euro in entry price. I think it's a kind of a decent, proposition already.
Renault CEO Luca De Maio there speaking with Bloomberg's Oliver Crook. Coming up on the program, the U.S. is sending an advanced missile system and associated troops to Israel, all in order to deter Iran. We're going to bring you the latest on the Middle East conflict. And later in this hour, we're going to catch up with JPMorgan's Jack Caffrey on the shift from a fear of a hard landing to soft landing to no landing at all. This is Bloomberg. The UK is currently having its annual investment summit right now. Prime Minister Keir Starmer currently speaking at that, making the case to investors around the world to trust in his new Labour government. Bloomberg caught up with the CEO of Barclays. Here's what he had to say.
This is a government that's dedicated to growth. It's going to take the tough decisions to deliver growth in the country. And I think with growth comes a lot of opportunity in the UK. And the growth is going to come from investment and from easing up of restrictions. So I think we're going to see the start of what might be a very promising time for the country.
Where do you see that opportunity?
I think it'll be in some very important sectors at the high-tech level, in climate technology, in pharma and software, and down to more basic things like housing and agriculture, which are an important part of the economy.
Venkat, I think it's in February that you committed to deploy around £30 billion in the UK in the coming years. Is that easy to do? Do you have a clear idea of where you want it to go?
Yes, we want to provide financing to corporates and individuals across the UK. We are going to, at the end of this month, complete a tranche of that, which is £8 billion when we buy Tesco Bank's credit card portfolio, which we then look to grow. And we've already started the turnaround in deploying assets for SMEs, for corporates, for individuals. And so we do think it's possible, and we will look for opportunities to fulfill that ambition of ours.
We'll hear more about this industrial plan, but when you look at some of the things that are challenging, we have, of course, the October budget coming up. Do you worry that they're not quite landing the message, that they're a little bit too negative about the economy, and so that hurts spending?
Well, I think it's important to land a positive message, which is that inflation is under control, growth is eminently possible. The UK is a great trading nation. We've got great infrastructure, as you see, and wonderfully talented people. We employ many thousands of them here at Barclays, not just in our retail operations, but in our investment bank, where our traders compete with the rest of the world, as you know. So I think it's important to land that message and to show demonstrated commitment towards the investment that's required to generate growth.
CS Venkatakrishnan, the Barclays CEO, on the UK's hope for investment. Let's quickly get you some front page news, a look at what's making headlines around the world. First up, the Post has this: hurricane recovery officials in North Carolina relocated amid reports of armed militia. According to emails, FEMA had moved personnel from hard-hit Rutherford County to a different area because of threats to government workers in the region. Next up on the Journal, the scale of Chinese spying is overwhelming Western governments. Beijing conducting espionage activities on what Western governments are calling an unprecedented scale, including securities agencies, private companies, Chinese civilians. Finally, on the New York Times, Harris has been struggling to win over Latinos. Meanwhile, Trump has been holding his grip, the polls show. Okay, coming up, we'll have more politics and markets for you. From our global headquarters in New York, welcome to Bloomberg Brief. I'm Danny Berger. Manis is off for a much-deserved holiday. Let's set your agenda. More to come. China's latest finance briefing leaves economists wanting more, but Goldman upgrades its outlook. No respite. Boeing to slash 17,000 jobs, with the plane maker lurching from one crisis to the next. And the U.S. is sending Israel an advanced missile defense system and associated troops to deter Iran. Your bond market closed today, just futures trading. They are weaker this morning. It is Columbus Day. Equity markets are trading. S&P 500 futures up 0.1% after the 45th record high on Friday. Chinese equities ending up nearly 2% after a finance ministry briefing over the weekend. We'll get to that in just a moment. There was some slight disappointment over it, perhaps why Brent crude is down 2%, or perhaps because we haven't seen a retaliation from Israel to Iran. That's currently at $77 a barrel. The offshore Chinese yuan, it is weaker this morning. We had the latest data jump out of China showing a setback in exports. It's an area that had been a bright spot for the economy. Chinese stocks, though, ended the session higher before we got that data, with Beijing over the weekend signaling more stimulus to come, but maybe lacking the details that some had wanted. Joining us now is Bloomberg's Jill Desis. So, Jill, what were the details we wanted and perhaps got and didn't get?
Yes, well, Danny, I think at this point, investors were really hoping that there would be something on the fiscal side to support a lot of this big monetary policy stimulus that we saw out of the central bank just a couple of weeks ago. Going into the weekend, investors were really hoping for something to the tune of maybe 2 trillion yuan, the equivalent of around 280 billion US dollars worth of stimulus, including maybe cash handouts, that kind of thing, to help boost the economy and really to help consumption there. We really didn't get that, though. What we did get instead out of the finance ministry was some pledges that they'd allow local governments to use special bonds to buy up unsold homes. That's been part of this bigger push by the government to try to solve some of the nation's property crisis issues. We also saw a little bit of a hint that maybe they'd be open to issuing more sovereign debt this year as a way to kind of help support local governments, which are dealing with really strong debt burdens right now. And that would require, probably a mid-year budget revision there. We'll have to see whether that actually materializes. But really here, it's this sort of story where, yes, there's this promise of more stimulus, but because we didn't really have a big headline number to attach to everything, that's where you're seeing a lot of volatility in markets and trading today, and some of that disappointment kind of carry through.
Where does the optimism then come from, Jill, with Goldman Sachs increasing their growth target 4.9% for China in 2024, up from 4.7%?
Well, really what Goldman is looking at here is the totality of measures that China has taken over the past several weeks, because ultimately what investors are kind of disappointed about right now, or at least where, again, that volatility is coming through, is this expectation that there would be a big fiscal boost to follow what we're already seeing from the central bank. So Goldman is factoring in a lot of those rate cuts that the government has announced, some of these additional easing measures that the government has announced to kind of help the economy reach its target of about 5% growth for the year. year. So it seems that Goldman's kind of factoring in some of those issues. I think really where the longer view comes in is what does China's economic growth story look like, not just through the end of this year, but also over 2025, 2026. And that's where investors are wondering, even if you've got enough that ultimately helps propel growth up at the end of this final quarter into the end of the year, are you actually doing enough to solve the property crisis longer term, sort of solve a lot of these deflationary issues that you're seeing within China right now? And that's where there's still a lot to be desired, at least on the investor front.
Jill, appreciate it. That is Bloomberg's Jill Desis out of Hong Kong. Joining us now here in the studio in New York is Jack Caffrey, Equity Portfolio Manager at JPMorgan Asset Management. Jack, thanks so much for getting up early, for joining today.
Oh, thank you for having me.
So it's this narrative pendulum, which you've talked about for some time, that's been going on for the best part of a year. A lot of it has been concentrated on the data on the Fed, but the Chinese stimulus had been a portion of it reawakening global growth. What's the ability of the China narrative at this point, without a lot of detail, to really reawaken risk on?
I think looking at the totality of what's been announced over the past, call it 2.5 weeks, it's been much more focused on the balance sheet rather than the income statement of China overall. When you think about reserve ratio cuts, when you think about interest rate cuts, trying to stimulate the stock market, talking about doing something in the bond market in order to create conditions for more clarity around how you actually get that growth, how you get that income going. But the challenge is always, not to overuse the analogy, the pendulum. Markets prefer clarity. They want to know X dollars by Y date, and then we can try to put that into our model. And I think if anything, that's where you've had that gap between expectations versus the reality on the ground. And to some extent, you announced a big policy shift, perhaps because you had that week-long holiday period. It allowed an investor narrative to take hold that obviously they see what we want and they will give us what we want. And then when they come back from that holiday, you're left with, is that all there is? Yeah. And that led to a Saturday morning, Friday night press conference trying to detail, we have more, and we're left with, well, is that all there is, volume 2? And sometimes really the sequel is better than the original, so you're left with, give us a little greater clarity. And I don't think that the CCP wants to be, if you will, bullied by a market into providing something that is ideologically a little bit at variance with what their plans are.
So what do you do? Because there had been this hope that it gets rid of TINA, that there is an alternative to U.S. equities, that not only Chinese stocks, but maybe EM, maybe Europe-related ones. Is that dream alive at all for you?
As a U.S. equity portfolio manager, I'd rather there be fewer alternatives.
Fair enough.
But the realistic issue is, the U.S. market is not a cheap stock market. International markets are cheaper on a relative, if not absolute basis. And where I think investors can get their sense of clarity around where the world might be evolving towards, you're going to see flows ultimately follow those expectations. Can we get to a situation where people get everything they want from the governments they want? Just as I was taking the car in this morning, we were listening to the Barclays CEO talking about what he's hoping to accomplish under greater clarity under a UK system, or hoping to get greater clarity out of the UK government in terms of what's going on. That's a market that's been moving higher over the last several months, certainly, having gotten some clarity after its election and a realization of the government has the supermajority to do what it wants. So I think investors are constantly looking for what's the next big thing. I just think that the current big thing in the United States is still pretty attractive over an 18 to 24 month period of time.
The current big thing being literally big things, large cap stocks?
Well, large cap stocks have actually, we've gone from almost the magnificent 7 to the meh 7, if you will, with two terrific 2 within that. Because if you look within where you've got momentum, semiconductor software have moved more to the middle of a market. A market which is up 20% on the year, made its 45th all-time high. Basically, we're averaging one a week. Things are pretty good, but I think you're starting to see some broadening out. You're seeing people looking into bigger ticket consumer purchases. Some names leverage the capital spending, the second derivative, if you will, of the AI trade. Not that the first derivative has been bad in any stretch of the imagination, but investors are looking for what can you do for me next, not what you did for me from January to May.
But you did mention that valuations are still high, and I know one of your outlooks is that the next 12 months forward, it's going to be single-digit gains, which contrasts with this year that's shaping up to be at least 20%. Is that just based on valuations?
Yes, I mean, there's just constant battle between the earnings story and the valuation story. I think the earnings story remains attractive. Even with a slowing economy, we're slowing down into sort of a 2% trend, 2 and change trend growth, a 2 and change inflation outlook, mid-single digits effectively. That's the raw materials. You add some operating leverage, some financial leverage, you turn that into high single, low double digit sorts of earnings. But over the past month, the 10-year Treasury has gone from 3.6% to 4.1%. That starts, making bonds potentially an interesting story to have, painful as this is, again, for me to say and admit. But against that, it's hard to tell a story where stocks go from 20-something multiples to high 20-something multiples. At some point, you're saying we've embedded tremendous expectations. And again, if our lesson is trying to manage expectations, and we saw that with the financials.
Yeah. What did you make of the financials? Because going into it, there had been that Barclays conference where you get the warning from Allied Financials on delinquencies, specifically auto delinquencies. You had JPMorgan resetting expectations. JPMorgan and Wells Fargo both noted a really healthy consumer, even setting aside credit provisions. From what you've heard so far, is the banking sector healthy? And what does it say about the overall consumer and state of the economy in the U.S.?
Friday was a great example of what can happen when you let people sit in fear for a period of time. So we come back from summer vacation, you had that Barclays conference, you had some other updates where you pointed to things are maybe not perfect and you are seeing some deterioration at the margin. And then we wind up getting through the totality of the data rather than single data points around a single portion of, what was interesting with the auto data is autos went through the global financial crisis with pristine credit, where housing was the problem. So I think to some extent, problems in autos are not supposed to happen. The idea you have to keep your car to get to work, so you're going to maintain that access to that credit is your most important. So when that seems like people are getting a little bit laxer in their payments, like what's going on there? And then you get no other information as companies go into their quiet period, you stew. So it's almost like watching a horror movie. You know something bad is happening, and the question is it going to be Hitchcockian and mentally terrifying, or is it going to be a splatterfest? And ultimately, we got neither. We got
splatterfest or birds, essentially.
Well, I was thinking psycho, but either way.
That works. More violent than birds, I assume. But the auto delinquencies, sorry to get off, we got way off topic there. Back to auto delinquencies. I mean, it's not like that they have improved. The macro data is still one of weaker. I mean, what do you do with that? Of retail sales, we're going to get them this week, but for the most part have been otherwise healthy. But this one quarter that, as you point out, is odd for where we are in a cycle.
Well, I think we have this constant interplay between what's happening and what we think is going to happen. And at the same time, we've seen, again, the 10-year, a measure of fear and greed, if you will, go from 3.6% to 4.1%. You've also seen economic surprises move notably higher in the United States. So yes, the data is slower, but the data is actually slowing at a slower pace than we were fearful of. So we've taken the fear of the hard landing that we dominated the narrative very early this year off the table. Then it became the soft landing. And now it almost seems as though maybe there's no landing. When we think about the revisions to, by the way, all that data we told you things were smaller, actually they're much bigger. The employment picture got better. Thursday's jobs report, a little messier, and we're left with what of that is hurricane, what of that is cleanup, what of that is port strike. So we have noise in the data, but ultimately we have this, and where I think economic data matters, we get that daily. We get earnings once a quarter, and then we only get 4 of those a year. But we wind up getting economic data, which either increases or decreases our confidence in what that single point estimate is that a specific bank is going to report at 6 o'clock on a Friday, or for whomever has the good misfortune of reporting today at 6:05. It's obviating and blowing out anything I say, the relevance.
I think you might be safer there. I think the next big bank is tomorrow with Bank of America. So I think you might get a break in that, Jack. Jack, really wonderful to have you on. Everything from economics to Hitchcock. Expect nothing less of you. Jack Caffrey of JPMorgan Asset Management. Thank you again. You're watching Bloomberg. This is Bloomberg Brief. You're looking live at the principal room. Coming up, a conversation with UK Prime Minister Keir Starmer. That's at 9:30 a.m. Eastern, 2:30 p.m. in London. You're watching Bloomberg Brief. Danny Berger here in New York. It is only 22 days until the U.S. election. Of course, one of the big topics, geopolitics in Israel. The Biden administration is sending an advanced missile defense system, including associated troops, to Israel. In response, Iran's foreign minister says Tehran has no red lines in defending itself from threats, and that the U.S. is putting lives of its troops at risk. For more, let's bring in Bloomberg's Michael Shepard on this. Mike, again, what sort of is the take on this, on the latest, on a time in the campaign where geopolitics has been front and center, and you have the Biden sending more troops after already sending ships and other equipment to Israel?
Well, we have to look at the context in the region. Right now, we are awaiting Israel's response to the early October attack by Iran, a 200-missile volley against Israeli territory that Prime Minister Benjamin Netanyahu is still vowing to retaliate for. And what the U.S. is trying to do is shore up Israel's defenses against perhaps another similar onslaught of missiles coming from Iran, but also from Hezbollah, which has its own extensive missile batteries and capabilities in Lebanon that are pointed at northern Israel. So, and this is adding to U.S. forces that are already in the region and have been supporting Israel. During that attack that Iran waged that I just mentioned, U.S. forces, naval vessels, managed to contribute to defending against that missile onslaught and knock down some of the missiles coming from the direction of Iran.
Mike, closer to home, it's the run-up to the election, 22 days away. Kamala Harris, Tim Walz spending their time in swing states. How does it make sense in terms of what kind of demographics the candidates are focusing on when you have that being the tact of the vice president and Walz, and then you have Trump not going to just swing states, but places like California, Colorado, New York City, places that are Democratic strongholds?
Well, let's break it down a little bit. We can talk about the vice president's strategy first. She is really aiming this week at the so-called blue wall of traditional heartland industrial states in the north, the Midwest and Pennsylvania. These are places that the Democrats have said all along that they need to win and really dominate in to ensure that Kamala Harris wins the presidency in November. She will be going there, though, not just looking at the states broadly, but at a very specific constituency that has become one of increasing concern for Democratic leaders, and that is black voters. A New York Times poll over the weekend showed that support for Harris had softened compared to the last two presidential elections. And we saw the head of the Congressional Black Caucus, James Clyburn, say over the weekend as well that he was worried that some black men may either stay at home on Election Day or even cast their ballots for Donald Trump. So the vice president is making these appeals in person, and she also unveiled a new proposal this morning aimed at supporting black entrepreneurs with loans that are forgivable up to $20,000 and other programs that are aimed at enticing black voters on economic grounds as well.
Mike, we're also still grappling with the aftermath of both storms Helene and Milton. Do we understand how things look on the ground? And of course, there's devastation there, but also how it impacts voting in November.
Well, it's a great question, Danny, because especially in some of these hard-hit regions, such as western North Carolina and in Georgia as well, the logistics there are really precarious. Transportation is still very difficult. Telecommunications are still very shaky, and it will take a long time, well past the election, to get all of those things shored up. Local officials are trying to make as many accommodations as they can so that people can get out and vote and have their ballots counted. But there is a lot of push-pull between the parties and local authorities about exactly what can be permitted. And right now, officials and even the campaigns themselves are just focusing on the emergency and relief and response efforts. We saw President Joe Biden visiting Florida yesterday, promising another $612 million in aid, and also imploring lawmakers to return to Washington early to hold a session so that they could approve additional aid. For now, House Speaker Mike Johnson says no such special session is really necessary, so we will have to see what comes in the form of lasting aid. For example, the bill from Milton alone will be northward of $50 billion, President Joe Biden said last week, and we could expect the cost from Hurricane Helene, which devastated those regions in Appalachia, to be even higher.
Hey, Mike, we really appreciate it. That is Bloomberg's Michael Shepard giving us the latest on D.C. Tomorrow, a really important conversation. Join the Bloomberg editor-in-chief, John Micklethwaite, who will be speaking with Donald Trump. That will be live at noon Eastern. Now, on to corporates. Boeing this morning announcing a 10% job cut over the weekend. That's to around 17,000 workers. A strike still ongoing. Shares lower in the pre-market trade. Let's get over to Bloomberg's Benedict Campbell. Benny, just how dire of a situation is it for Boeing where they're resorting to job cuts at this moment with a strike still ongoing?
Good morning. Yeah, it's a pretty risky strategy that you're sort of throwing these 17,000 job cuts, 10%, into the middle of an already messy strike. Obviously not something that is looked upon favorably by the unions and the workers. They see this as a threat. Boeing basically trying to some degree, negotiate in public here, saying we might not need all these people who are striking, and business is such that we have to make some tough decisions. We don't know at this point exactly where the hammer will fall. We don't know who will get cut. The company did say on Friday that management, executives, and workers will equally be affected. So there's a sort of a sense of solidarity and sort of common purpose in this, but at the same time, we don't know how much it'll cost. We don't know how long it'll take. So the sort of financials tied into these measures, that's the part that remains unclear. Boeing is due to report earnings on the 23rd of October, so middle of next week, and hopefully we'll find out a little bit more then. But for the time being, the stock is down a bit. People are still sort of digesting what came out late on Friday.
All right, Benny, thank you so much. That is Bloomberg's Benedict Campbell. We have some breaking news for you. The Nobel Prize in Economics has just been awarded. It is being awarded to 3 individuals. That is Darren Acemoglu, Simon Johnson, and James Robinson. They're awarded the Nobel Prize in Economics for research on how institutions are formed and how that affects prosperity. The 3 economists get to share a prize of 11 million krona. That's about $1.1 million. Again, that announcement being made this morning, just moments ago. Last year, it was Claudia Golan who won for her research into the gender pay gap. So again, these 3 researchers on for how institutions are formed and how they affect prosperity. Okay, coming up, we're going to set you up for your week. We got some earnings ahead, big banks, big tech, all of that. We'll break it down for you on your brief. It's your Bloomberg Brief. I'm Dani Burger in New York. Let's get you set up for your trading week on this Monday. Bond markets are closed today. Futures are still trading. That is for Columbus Day. Bank earnings are going to continue. Goldman Sachs, Bank of America, and Citi, they will all be reporting tomorrow. We're also going to get more earnings, TSMC and Netflix, those out on Thursday. So we're going to get the big cap tech stocks reporting too. Oil, meanwhile, let's get a check on that. Lower this morning by more than 2%. This comes after the weekend. China had its Ministry of Finance meeting. Maybe some disappointment, maybe also baked into here the fact you didn't get any sort of response from Israel. But oil down nearly 3% for NYMEX crude. Okay, that's it for your brief. Surveillance, that up ahead.